numbers out on China. Manufacturing grew at the slowest pace in 17 months. Investor Marc Faber is with us now. Prior to this data release, he predicted China's economy could crash, not will crash, but could crash in 12 months. The author of the Gloom, Boom, and Doom report joins us now from our bureau in Zurich. Marc, always glad to speak with you. Thanks so much for joining us. Are you somewhat vindicated by this manufacturing report? I mean, slowest in more than a year. It indicates slowing, which you've been saying all along is the case for China.
Yes, I mean, I've been arguing this year that the economy would inevitably slow down because the impact of the stimulus would diminish. But having said that, the economy hasn't crashed yet. It could still crash. But on the other hand, if you look at the performance of equities worldwide, it seems that the worse the economic news is, that the more the markets go up, because the market participants expect further easing measures and maybe further stimulus. So altogether, I would say it's not going to be a disaster for stock investors yet. So it's interesting, the Chinese stock market began to discount the slowdown in economic growth actually precisely a year ago in August 2009. The market peaked out and then drifted lower. But now that the bad news is essentially out, the market has started to rebound.
Yeah, well, we did see the Chinese market actually finish higher. I know Morgan Stanley put out a note saying that it is optimistic, actually, about Chinese stocks because the government is going to do more to help growth in China by year's end. Do you think that is one thing the Chinese government can do to avoid, as you put it, the scenario of a crash?
I'd like to make following observation. We have a global economy, and an economy has different sectors. And you can have recession in some sectors of the economy. You can have a crash, say, in the property market, and you can have other sectors expanding.
That's the biggest weakness, right, Marc, as far as you're concerned in the Chinese economy right now, is the overheating in the property. But we have actually seen the government try to rein it in. So do you have confidence they'll be able to do that successfully?
Well, I'm not sure, because if they ease again, the speculation will go on. But we have credit problems in the property market. Undoubtedly, we have Ponzi scheme-like of loan sharking operations all over China that are very dangerous and so forth. But what I'd like to point out is that the agricultural sector, the rural sector in China and everywhere in the world is doing relatively well because agricultural prices have started to rebound. And I also see it in Thailand.
Marc,
in Thailand, new car sales are up very strongly.
We have about 30 seconds left. Marc, do you think the Chinese government will delay increasing interest rates this year?
I think even if they increase it marginally, it's meaningless, because interest rates are far below nominal GDP growth and, in my opinion, far below inflation.
Marc, thank you so much. Marc Faber joining us there from our Zurich newsroom, the publisher of the Gloom, Boom, and Doom report, joining us with his views in reaction to that latest data coming out of China.